time for our 360 round. The markets have taken a leg down in the last half hour or so. The Dow now down 363 points. We have our panel, John Roy, Managing Director, Water Tower Research, Michael Lee, founder, Michael Lee Strategy. Great to see you both. And maybe there's some more opportunities here because people are really feeling the pain. I mean, this is the worst week of the year for the S&P 500. Michael, the NASDAQ Composite's in correction territory. I haven't seen you in a while, Michael. I mean, what are you thinking about the market overall? Good to see you.
Well, thank you so much for having me. Great to see you. It's my understanding that a lot of factor hedge funds and factor pods at larger hedge funds have been basically carried out on stretchers. And this has been the greatest devastation to factor-based investing over the last few weeks. A lot of that, like your momentum factor, your growth factor, and the combinations thereof, and you're just seeing massive gross deleveraging from the hedge fund community, and it looks ugly, and there's been a massive air gap, but in my mind, nothing fundamental has changed. And so a negative headline came out yesterday, which was Microsoft canceling some servers with CoreWeave. That's because CoreWeave can't get their hands on GPUs. They can't stand up the data centers. They need to support Microsoft. And so I don't see this as growth slowing. I see this as massive supply constraints for demand that is beyond the pale at the moment. And I don't know when this ugly trading period of these stocks are going to end, but ultimately 6, 12, 24 months from now, we are substantially higher.
All right. So, John, it's great to see you as well. And I wanted to see, you've been focusing a lot on small caps. That's something that you've always liked to take a look at. We have the AI play, which people love to look at the growth stocks. Where are you finding opportunity now?
Yeah, the thing we like to look at is a combination of AI with some other technology, particularly in small cap. That's the way you're going to get the growth. And Michael's right. I don't think this is a fundamental change that you're seeing. AI is still the right play. And as your earlier guest had mentioned, you really wanted to be in tech for growth. In the small cap area, we like Gorilla. I know it's seen a couple down days here, but we do like Gorilla here. It's a company that I've been working with, and I think their potential for smart cities is quite big. GRRR, it's a ticker there. Another one that is another combination is Tuya. They're combining AI with IoT, Internet of Things. TUYA, and they're also in a good spot, we think. And the last area we like to look at is a combination of AI and drones. There's a couple companies I've been looking at there. One is Unusual Machines, UMAC is the ticker, and the last one is Palantir AI, which is PDYN. All those are worth a look.
Wow, AI and drones, Unusual Machines and Palantir AI. A lot of people maybe don't know about some of these names because they are smaller. I mean, some of these, maybe Gorilla, they've maybe heard of more so. But thank you for bringing us those unusual names. Michael, what kind of names are you going to be looking for, or when do you buy in? Because you said fundamentally things are still looking pretty good, right?
Yeah, so I saw a great line this morning. Walmart is trading at 35 times forward earnings. NVIDIA is trading at 23 times. So you tell me, like, what has better growth prospects? What's going to generate a higher free cash flow yield over the next 2 or 3 years? And so all these names that have been beaten up, I think are absolutely worth a look. I'm fortunate enough to have bought and really started coming hard into the space towards the end of 2023. So for a lot of these names, like I'm playing with house money for my clients, and I'm pretty close to fully invested. My all-time favorite stock that I've ever seen is Palantir. Palantir, traded up to $125 and had a massive gap up from 83 to 103. We got to close below 103. We backfilled that gap. We closed yesterday below 83. If we get another close there, I'm looking below 83. I'm looking to add to that stock in the 60s because I think we kind of go back to the pre-last earnings run-up and start moving in there. But the prospects for this company over the next 3 to 5 years are like nothing I've ever seen. Morgan Stanley thinks AI software spend this year is roughly $60 billion, and that goes to $400 billion in 2028. Palantir's got 7 to 9% market share of that now. If you extrapolate that out to 2028, that's a $20 to $30 billion revenue number, which is a 4 to 5x from where they're going to end up from this year. And the way of the operating leverage from their business, with the way they use their engineers, the fact that they've been working on this technology for 20 years, it's going to be a cash machine, a profit machine. And as a SaaS company that's going to continue to grow at unimaginable rates, it's always going to have an astronomical multiple. So I'd be looking to add this based on tonight's close in the low 70s, high 60s.
Yeah.
That's where my clients that didn't get in, or clients that maybe wanted to sell somewhere up in the 120s or missed this move, I'm going to be adding it there, because I've never seen a technology company ready to disrupt the world the way that Palantir is.
Yeah, you talked about the spending on AI, and you have all the big guys: Palantir, Google, NVIDIA, Microsoft, Marvell, Broadcom, Palo Alto, CrowdStrike, ServiceNow are all in your realm. And John, thank you again so much for all the names that you brought to us, some of the smaller AI names, AI and small caps, a good variety today. Thank you both. John Roy, Michael Lee, good to see you. Thank you.